Welcome to the Swing Trading with Cycles channel. This is our broader market update. It is November 28th. It's just before 4 o'clock, so market is just about to close. So candles are going to be what they're going to be. They're probably not going to change very much, that is to say. And the big update here is that we are moving into a daily cycle low across the indices. And so that means we should expect a decline for several days, and we'll talk about what the price might be, what price levels might be. And we want to watch to see where that swing low prints so that we understand, is it going to be a higher low? And most importantly, within that context, how does that sort of play with weekly levels? So let's start with the S&P. We'll start with the daily chart. So Friday was, and that was the day after Thanksgiving, was day 30. We made a slight new high for the daily cycle at, and this is the S&P cash at 4,034, right? And today we've come in and we've made a big swing high. Now, it hasn't closed yet, but I don't think we're going to recover this in the next 8 minutes. So looks like that's where we're going to close. Like, we're going to close as a swing high, right? Which means, and if you're not familiar with that terminology, definitely take a look at the video about swing highs. Depending on what app you're on, you should see that show up in the upper right hand corner, the opportunity to go and just watch that video. Really important concept. It's the way a downtrend starts. It happens in all markets. And so we've also crossed below the 10 period moving average, which is what this line is, just anecdotally speaking. And it's also kind of turned over. You'll hear a lot of cycles people talk about those things as quote unquote criteria for moving into a daily cycle low. And this is not auspicious because we just had this little decline, right? Like, you would have thought that we'd have more of a rally after this little decline, that this would have washed enough people out. Now, in terms of targets, this whole move here, this whole daily cycle move was about 500 points, right? Something in that neighborhood, right? And so wouldn't be unreasonable to give back like 150, right? That'd be like 30%, like 50% would be even not crazy, right? And we can see, what would that look like structurally, right? If we came down and gave back, let's say 250 points, that would get us down into like the 3786 area. And the reason I bring that up is because that kind of coincides with these levels. So like, you think about it, this is your last major swing low on November 17th, right? After this little decline. And then we went on to make a new high on day 30, and then we're making a swing high off of that. You would expect that we'll at least come and test that level. So that's 3906, and we're up here at 3960. So I am not short the S&P. I am short IWM, actually, and we'll look at that one. But that gives you a relatively obvious level. And the question is, do we slice through that? And if we do, then you could see us getting into that 3860 kind of neighborhood. And then from there, there's actually a gap right below, which is interesting. So things start to get a little bit dicier there. But remember, we could give back 50% of the rally. It wouldn't be crazy and continue higher. But we're topping out in the daily cycle. That's important. We know this last cycle topped out on day 4. My God, it was horribly, screamingly bearish, right? And bottomed on day 27. Here we've had a nice, healthy rally. So it's a right translated daily cycle, most likely, right? We're probably not going to get like a 70-day cycle. And if we think about what that means for the weekly, this is where I was talking about the important levels. So since the week of November 14th, these last 2 weeks have actually just been inside weeks, inside the range. Now, that's not true. Actually, last week made a slight higher high, like just a marginal higher high, right? That was what the higher high we made on Friday. And so what week is that? 1, 2, 3, 4, 5, 6, right? So today's week 7, or I should say today started week 7, and we're just inside the range from last week, which was basically inside the range from the week from November 14th. And that range is 4,028 on the upside, or 4,029 on the upside, call it, to 3,906 on the downside. Not a coincidence that that level matches what we were talking about on the other chart. That's the multiple time frame analysis, folks. It should match. The structures all connect, right? The low for that week makes sense that structurally it would be a swing low on the daily chart. And so you kind of think about it, it's like, if we could hold this structure, maybe even get like a little false breakdown, get a wick below this and then get running, you could see that being a very healthy daily cycle decline. We do have Jay Powell speaking on Wednesday, so that's certainly going to be some kind of catalyst. So you might expect the market maybe drifts lower into that meeting. Maybe that becomes a sort of catalyst for moving higher. And so that's your weekly. And if we think about the monthly, we're just building more upper wick on this monthly, which means we're going to open, we're just increasing the chances that, or, we're pretty much guaranteeing that we're going to open as a inside month in December. So that's this, if I can get this candle, right? So that's this candle here, right? So you would expect, this is your November candle, so you expect now the December candle is just going to be inside the November candle, and we're going to have and the levels for the November candle are a high of 4,034 and a low all the way down to 3,700. So pretty wide range, obviously. So it'll be important for us to watch the weekly. And the big implications here are, that is a alert for grow generation. So the implication here is that is this a long-term cycle low on month 31? Are we going to hold that? And that's what really the stakes are. They're large, right? Let's move over to IWM next. That one is looking weaker. I wanted to call out. So in this case, this one, and I called this out on my last video, and this is true of the QQQ as well. This one didn't actually make a higher high on Friday, on the day 30, right? And even though it wasn't it wasn't a massive higher high, it was still obviously healthy. It's healthier to be making higher highs versus not making higher highs. And that's actually day 23, right? So IWM made a high on day 23, and now we're on day 31. I guess the way to think about it is the S&P, right, did this, dipped down, and then did that, right? In this case, we did this, and then this. So we printed a lower high. This is a swing low, this is a swing high below this swing high from the 23rd. That's a really bad sign, kind of structurally, right? Because what that portends is this, and then this, and then this, and then this, and then this, right? That's kind of the idea. That's why I did buy some puts on IWM. And the other reason is, notice that S&P chart, we were pretty, we're like 50 points above the low from last week. In this case, we're pretty much right there, right? The low from last week was $181.43, and we're here, we're 30 cents above it. So we're hovering ominously above it. Which, another way of thinking about that is, we are consolidating at the lower end of the range of this big candle, which is a bear flag. Now, again, with the Powell speaking, that's obviously going to have big implications. That could kind of completely reverse this and move it higher, mind you. But that's what we're going to have to see. The bear interpretation here is week 5 was our weekly cycle top, and we're now moving into a low. I'm not sure of that yet. I am short in the sense that I've got a starter position, and if we know that we're moving into a daily cycle low, then it seems realistic. It seems very likely that we're going to break this low. Now, it could end up being a massive reversal, so I'm ready, which is why I'm going in with smaller size, and certainly we'll be ready to get out if we do see a big sort of wick down, for instance. But this is setting up for breaking weekly lows, clearly, right? And the implication is a trip down to maybe even 175, right? And this yellow line, just to note, is the 200-week moving average. And whenever you see a yellow line on the chart that I have, it's the 200-period moving average. So this is all happening right above that. So, man, that's going to be really interesting. And I also called this out in my last video. The monthly chart is red. That's important, right? Because that makes this a potential lower, basically a lower high of this. And because if it's red, then it's already moving lower. And just like the other the S&P we talked about, this is going to be in a range, right? Next month, very clear levels, which means it makes for a nice risk reward short in the sense that your levels, right? And when I talked about getting down to the 175 level, you'd expect some kind of reaction down there, but then we could see a breakdown from there. And then that would be your short opportunity down to 165, so another $10. So that's IWM. And yeah, we looked at the weekly, we looked at the monthly, and then finally we'll do the QQQ. We'll start with the daily chart. And the QQQ, just like IWM, didn't make a higher high. Instead, it made a lower high. Literally did the opposite, right? Like, again, starting a downtrend. And for this one, you can notice we looked much more positive earlier today. This upper wick means this was a green candle at one point. It looked like we were going to come in and try to take out this high, and then we just kind of failed. Apple's not doing well, obviously pulling this down. Yet this is a bit of a bull flag right now, right? Until proven otherwise, right? Like we'd have to really kind of break down below that kind of level. So very obvious levels here. And in this case, the low from last week is 280.46, and we closed at 282.70, so like a couple bucks above it. But again, this is essentially consolidation at the upper end of the range. Yet this whole structure is consolidation at the lower end of this range. So it's complicated, right? If that makes sense. And that's what, if you look at the monthly chart, that's what that speaks to, right? That like this is just a massive downtrend, right? Like, just to be crystal clear, right? That's what we're doing. And so is it going to do this and then that, right? That's what it's trying to tell us. That's what it's starting to inch towards. And again, we're just starting the daily cycle decline here, right? On day 31. Now we could have just a couple more days of downside and then call it a day, keep moving. That's what we would kind of need to see. Otherwise, we're flirting with kind of breaking structure here. So that's the update on the broader markets. And I'll say if you're not familiar with just the S&P in general, and you have a particular other asset class that you're interested in, just know that this is going to drive the bus. So you definitely want to make sure you're watching what's happening here, because it is going to move the broader direction. Thanks for watching.